Mortgage rates are finally back in the low sixes. And with the Feds likely cutting rates soon, the big question is, will that bring a flood of buyers back into the East Bay? Let's find out. Welcome to the East Bay Housing Market Report for September 2025. If you're buying or selling a home in the East Bay right now, here's what you need to know. We've got more homes for sale than this time last year. Prices are mixed depending on the city, and sales are slowing down overall. Okay, let's talk about mortgage rates because that's the oxygen for the housing market. Right now, the 30-year fixed rates are in the low 6% range. Freddie Mac has them at 6.5%, and Mortgage News Daily as low as 6.29%, the lowest we've seen in nearly a year. That's giving buyers some breathing room, with the typical mortgage payment dropping down to levels we saw last January. But demand hasn't taken off. Pending sales are only up about 1.6% year over year, while home prices are still inching higher. Now, the jobs reports add another layer. August came in soft, only 22,000 jobs added nationwide, with June revised down to a net loss of 13,000. The unemployment rate ticked up 4.3%, the highest since 2021. That weakness makes it almost certain the Feds will cut interest rate in its September meeting. Some economists are even floating the chance of a bigger than usual 50 basis point cut. So what does that mean here in the East Bay? Buyers could see even more relief if the Feds eases further, making mortgages a bit more accessible. For sellers, it means motivated buyers are watching these low 6% opportunities closely. The key is still the same. Well-priced, well-prepared homes will move, while overpriced listings will sit. Now let's zoom in California and the Bay Area. At the state level, the housing market is showing mixed signals. New single-family home sales slipped in July, down less than 1% from a month before and more than 8% lower than a year ago. Builders are still facing challenges with high inventory, around 9.2 months of supply, well above the 7.9 months we saw last year. That tells us new homes aren't moving quickly, even with slightly lower mortgage rates. On the positive side, mortgage delinquencies remain very low in California, roughly 2.2%, well below pre-pandemic levels. That means we're not seeing a wave of distressed sales, which helps prevent prices from sliding too far. Here in the Bay Area, it's really a tale of contrast. San Francisco is showing some life again, with home sales up about 5% year over year, partly fueled by renewed confidence in the tech sector, AI mostly. But across much of the Bay, prices have flattened or softened. Oakland has felt more pressure, while high-end suburbs like Los Altos, Orinda, and Saratoga, they continue to demand premium values. Los Altos tops the list with homes averaging over $4 million. Okay, let's go down to the East Bay market breakdown. The theme this September is more homes for sale, mixed prices, and slower sales. Compared to last year, there are hundreds more active listings across the East Bay, giving buyers more choices than they've had in recent years. Let's break it down by region. In the 880 corridor, homes for sale inventory surged in Alameda up 71%, Castro Valley up 42%, Fremont up 28%, Oakland down 19%. Prices are mixed. Hayward up 8%, Castro Valley up 6%, Fremont down 11%, Alameda down 8%, Albany 62%. Sales mostly slower. San Leandro down 46%, Alameda down 26%, Oakland down 12%. In Fremont, sales are up 35%. Moving on to West Contra Costa County. Listings way up. San Pablo up 429%, Pinole up 60%, Hercules up 30%. Prices are mixed. El Cerrito up 41%, Richmond up 5%, Pinole 13% down, San Pablo also down 4%. Sales are slowing. El Cerrito and Hercules down 47%, San Pablo down 33%. El Sobrante nearly doubled. Let's move on to Central Contra Costa County. Listings up. Concord up 53%, Martinez up 86%, Pleasant Hill up 22%, Walnut Creek down 5%. Prices are up modestly across the board. Sales are slower. Martinez down 22%, Pleasant Hill down 27%, Walnut Creek up 15%. Moving on to Lamorinda. Listings up in Moraga, Orinda, and Lafayette. Prices are split. Lafayette up 6%, Moraga and Orinda both down. Sales are uneven. Lafayette up, Moraga down, Orinda down also. Let's move on to the Tri-Valley. Listings way up. Dublin up 172%. Livermore up 69%. Danville up 57%. Alamo down 29%. Prices are pretty stable. Sales are slower. Pleasanton down 11%. San Ramon down 9%. Moving on to the Delta. Listings are up. Antioch up 26%. Brentwood up 27%. Discovery Bay up 25%. Pittsburgh down 18%. Prices all under pressure. Take a look at this. All of them down. In sales, like I mentioned, it's lower. Antioch down 29%. Brentwood down 25%. Discovery Bay down 11, Oakley up 45%. So across the East Bay, the story is consistent. More homes for sale, buyers more cautious, and prices moving in different directions depending on the city. Sellers who price realistically are still getting activity while others are starting to sit longer. So that's the snapshot of the East Bay housing market this September. More inventory, slower sales, and the patchwork of price movements across the neighborhoods. Looking ahead, the big question is interest rates. With the latest job report showing softer labor market, the Fed could have more room to start cutting rates. If mortgage rates dip further into the low 6% or even the high 5%, would that bring a flood of buyers back into the market? That's the wild card for the rest of the year. Hey, in the meantime, I've got some free resources for you. My first-time home buyer's guide to help you through the process. A house hunting tour checklist to keep you focused when you're viewing homes. And for the sellers, my DIY staging home tips to help sellers get top dollar without breaking the bank. You'll find all the links in the description below. I'm Mac Rogers. I keep tabs on the East Bay real estate market and neighborhood trends so you don't have to.